What's going on, everybody? In today's video, I want to look at two EV related stocks, and these are two that I've talked about before and I'm still very bullish on. We're going to look at ChargePoint, or CHPT. This is an EV charging stock, and we're also going to look at Indi, or INDI, and this is a semiconductor company, not just related to EVs, but as EVs grow, Indi I think will benefit greatly as well. But let's get started. If you don't mind, hit the like, subscribe, ring the notification bell, helps me out a lot. Check out the links down below for some stocks and cryptos. And let's start off with ChargePoint and then get into Indi. So I will leave this article down below for you, but it goes over ChargePoint and it also goes over another stock I want to look into at some point, Solid Power, SLDP. But I'll leave this down below for you. And we're gonna just skip right down to ChargePoint. And this article gives you a nice little summary of ChargePoint, kind of, and says ChargePoint is an industry leader in the EV charging niche. ChargePoint operates in both North America and Europe and has more than 225,000 charging points on its networks. The company boasts a 70% market share in the level 2 charging market in North America, giving it a powerful advantage over even its closest competitor. ChargePoint has more than 5,000 fleet and commercial customers worldwide. And moving on, we're going to look at Needham's Chris Pierce. He lays out a strong case for backing the stock, writing, "We're bullish on ChargePoint, as it is the dominant player in US EV charging at a time when EV adoption is accelerating for customers and fleets. CHPT runs the industry's cleanest business model, in our view, selling hardware directly to site owners for upfront revenue and a longer trail of subscription revenue for system software and maintenance that accrues deferred revenue based on contract length." And he goes on to say, "We like ChargePoint's capital-light model, which uses contract manufacturers versus vertically integration. Importantly, ChargePoint does not attempt to monetize drivers by selling power directly. We think investors will favor this cleaner, faster approach to shareholders' returns. And given ChargePoint's market position, we think customers prefer this model as well, validating ChargePoint's future growth prospects." Now, Pierce gives ChargePoint a buy along with a $14 price target that suggests a 51% upside on the 1-year time horizon. And on TipRanks, there are 7 recent analyst reviews of ChargePoint, and these break down to 5 to 2 in favor of buys over holds for a moderate buy consensus rating. There are no sells on this. The shares are selling for $9.26, and their $16.57 average price target implies a strong gain of nearly 80% over the 12 months. And as a side note, guys, these price targets constantly change. As stocks go down, usually the price targets come in lower. As price goes up, the price targets typically get more and more lofty. So I do expect, as ChargePoint potentially moves higher, we will see more and more positive price targets for ChargePoint. Now, one thing I did want to mention that's a bit concerning with ChargePoint is we are expecting a revenue decline quarter over quarter. And this is actually the first time we've seen this. Typically, this company has a very nice revenue growth, with the exception of this quarter back in March of 2022 and May of 2022, where we saw only $1 million increase in revenue. However, typically, we see somewhere around $20 million or so increasing in revenue quarter over quarter. So to me, it is a bit concerning that we're expecting lower revenue compared to what we've seen previously in the last quarter. However, I expect the company in their next earnings will stress how their year over year revenue growth has gone up nearly 50% or so. And looking at the chart, this has somewhat maintained its May 11 low. It slightly broke under it, but then it is quickly bought up. So it only dropped its May 11 low by a few cents. So I think this 850 area is a very important level of support. And as for this channel here, we are starting an ascending channel. It broke down, tried to pop back in it, found resistance on its previous support level on the channel, and also found resistance on the 50 MA. And one thing with this company is they did have a golden cross back in September, but it did flip to a death cross as the overall market kept selling off into the end of last year. And just like many stocks, ChargePoint hit its bottom at the end of December of last year, or 2022. And this is right around where its May 11 low is, like I said, only a few cents lower. I personally think it'll be a great buying opportunity over the coming next few months to buy ChargePoint, especially as we potentially get news headlines going over how they expect lower revenue moving forwards, at least in terms of this next quarter. But I'm still extremely bullish on ChargePoint, and as EVs grow, ChargePoint will continue to do well and continue to see increasing revenue and eventually profitability. And next up, I wanted to go over Indi Semiconductor. This is a very slept on stock, but I'm extremely bullish on this company, and they are expecting profitability by the end of 2023, and I have every reason not to doubt them. They have an extremely experienced exec team, with many of them having over 20 years of experience working together in the semiconductor field. They were previously running Axiom, which is a semiconductor company that Skyworks eventually did buy out. So one day Indi could potentially be an acquisition target. However, I really don't hope for that. I think this company will be better off not being acquired by a larger company, but you never know what can happen. But let's look at Indi Semiconductor, check out the chart, and check out a couple other things. So I will leave you guys their previous earnings report down below, but this is a company that has had consistent, and I mean very consistent, revenue growth Only a few quarters ago, they were pulling in somewhere around 10 million, and now they're expected to pull in 40 million on their next earnings. And I want to show you something regarding their outlook. And this is said by Indi's Chief Financial Officer, or CFO. Specifically, for the first quarter of 2023, we plan to scale to $160 million annualized revenue run rate, including a stub portion of Geo revenue, which is a recent acquisition they made, with non-GAAP gross margin in the 52% range. Further, we believe the combination of Indi's top-line trajectory, gross margin expansion, and operating expense leverage will yield profitability in the back half of this year. I don't doubt for a second that they will achieve profitability by the end of the year. Worst case scenario, maybe the first quarter of 2024, if macro environment gets worse somehow. But these guys have been continually executing on all cylinders, just growing their revenue, making wise acquisitions, and also increasing their margins. But they are currently unprofitable. Same with ChargePoint, both are unprofitable companies, but I do expect profitability for both is not too far out. And I do want to go over Indi's chart. It had a sell-off like most stocks in late 2021, and it's been essentially sideways ever since then. However, when their last earnings came out, we saw a nice spike in buying volume, we also saw a golden cross, and we saw a breakout out of this sideways channel. And so far, it has maintained it. And as I said, their next quarter, they are expecting $40 million or so in revenue, which is a nice increase in revenue over their last quarter, where they got $33 million in revenue. This company has extremely consistent revenue growth. And I think even where it's at, some people might want to hold off, but I do think it's a great buy when you're looking long term on this company. I want to reiterate that I have a lot of faith in these executives. They are extremely experienced, and so far they have exceeded my expectations. But I definitely recommend you guys look into Indi, look into ChargePoint as well. But Indi specifically is just a very slept on stock in my eyes. And I do have some previous videos going over Indi. I'll leave you at the end screen or something. But those videos typically don't do very well because it's such a slept on stock. Hardly anyone even knows about this company. But what do you guys think about both ChargePoint and Indi? I think these are two great potential EV plays. There are definitely some others I'm watching as well, but let me know down below what EV stocks you're watching and what have you been doing in the market lately. But thanks as always, guys, and see you later.